Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. I'm going to be covering a very important subject, and that is game plan, a GPS, a game plan strategy. You must have a game plan if you're going to be successful. Every trader I know that is successful uses a game plan. Otherwise it's financial suicide. You're just trying to wing it in the marketplace. And believe me, the markets are very sophisticated, and winging it just doesn't count anymore. So here's what you need for your game plan. So let's start off with step number one. Write down your reasons for buying or selling a particular market. Sounds simple, but that's what you want to do. Step number two, write down your entry points for your market you're about to trade. So write down where you want to get in, very important. Now the next one to look at, which is very important in my opinion, and that is to write down when you're going to exit the market. This can be a stop or a market reaches a predetermined target zone. So again, so you know how you're going to, what your reasons are for getting in the market, your entry point, and where you're going to exit the market, either on a stop or when the market hits a predetermined target zone. Now this next one is really very important, and I'm going to emphasize this. Do not make trading decisions during trading hours. Let me repeat that. Do not make any trading decisions during trading hours, because you can get caught up with the emotion, and emotion is the #1 account killer you can have. Don't make decisions during trading hours. You'll either have your stops in to get out or a predetermined target zone, but don't arbitrarily just say, oh, the market's going down, I want to get out right now, because it's just going to fool you. Now step 5 is you want to review your game plan every day to see whether things are going the way you expect them to go. This allows you to adjust your money management stops and your target zone in a non-emotional way. Again, if you're making decisions during trading hours, usually they're the wrong decisions. Okay? So really, in essence, that's it. It couldn't be any easier. All it takes is the cost of your time and a sheet of paper, or you can do it on the computer. Now I do have in my book 5 professional trading rules that will make you successful in any market. Buy.com. If you have an iPad, you can download this free, and it has the workbook in there. If you don't have an iPad, no problem. We have you covered on that. If you don't have an iPad, just click on the PDF version, and you can download it as a PDF file. It'll also have the workbook on there. So that's really all you need to know about having a game plan. I think it's important we mention it in January, because these markets are really getting to be very, very choppy. Now having said that, I want to go to our next section in this video and show you exactly the key points we showed you a couple of days ago, that these markets will really begin to accelerate on the downside, or they'll find support and bounce from those levels. So let's take a look at those right now. One last thing, you'll find a link in the copy below this video that'll take you to this page, and you can download the PDF and also link into the iBook that's available to you as a member free of charge. Okay, we're looking at the Dow. I want to just quickly throw this in to show you where we think these markets are going to really turn around. As you can see, it's having a very negative day. It's down quite dramatically, and it's getting very close to our key level point. Our key level point is 1,000. Our key level point is 17,262. Okay, so if it goes below that level, which is right around here, it is going to start to accelerate, in our opinion, on the downside. This is the 200-day moving average. It's already broken below the 50, so you can see that we're getting very close to this level. We're also below the RSI 50 line, indicating further weakness. Our trade triangles are showing a trading range, so it is a trading range until this level is broken. Then that becomes more of an intermediate downturn in the market. Let's go on to a look at our next market. This is the S&P 500. Much the same picture there. You can see that we're sort of moving sideways. We have a 55 score gain right here, so indicating a trading range. We're below the 50 line, indicating further weakness. And the key level here to watch is 1,992, and we're very close to that level now. So watch that level very closely. If we go below that level, then we'll accelerate to the downside and possibly test the 200-day moving average. That's what we think will happen. So let's move on to our last index. The last index we're looking at is the NASDAQ. Now you can see here it's a little different picture. We have a -70, indicating that there's weakness in this particular index, as we have the weekly trade triangle pushing lower, indicating you should be out of this market altogether if you're following our trade triangle strategy. Again, we're below the 50 line on the RSI, indicating further weakness. We're well above the 200 moving average day, but the key level in our opinion here is going to be 4,090. That's going to be really a key level. If this market goes below that level, which is right here, it's going to, I think, accelerate more to the downside, but that hasn't been proven yet. So let's see what happens, but they are the big levels. Once again, the Dow, so we're looking at the Dow, 17,262, S&P 500, we're looking at 1,992, and finally the NASDAQ, we're looking at 4,090 even. So they're the levels to watch in all three of the indices. Watch them closely. I'm Adam Houston for Market Club. Be sure to use the GPS, which is our game plan strategy. I think you'll find it very useful in 2015 in helping you make money. I'll see you tomorrow. Have a great trading day.